What's up everyone, my name's Robbie. This is Robbie Manila, and today we're talking about why ETFs are mostly better than index funds. So every month on YouTube, people type in index funds versus ETFs. And as you can see, over 75,000 people each month are just typing this specific thing into YouTube. So there's a lot of great videos on this subject, but I wanted to approach this in a different kind of angle because I think a lot of people watch these videos and at the end of the day, they still don't really know what to do. Like, should they be investing in index funds or ETFs or both? And so that's kind of what I just wanted to answer in this video. Why not just go straight to the source, tell you what maybe I think is best, and that's what we're gonna do. So let's go ahead, let's run the intro and let's get started. Okay, so at the end of this video, I want you to leave a comment. Let me know if you think I'm right. Are ETFs better than index funds generally? Just let me know. I'd love to hear from you. And of course, hit the like button. Thanks. So I want to get one thing out of the way. I'm not telling you that you shouldn't invest in index funds in this video. There are plenty of times where index funds are a great vehicle to invest in. I'm not saying not to do that. I'm just saying that if you had to choose between the two, if you only want to learn about one of them, I'm saying ETFs are the way to go. So essentially, don't not invest in index funds just because of this video. So before I explain why I think ETFs are better than index funds, let's really quickly, really quick, go through the similarities between the two so that we know why they are very similar and why people get a little confused about the two. So the first similarity between these two things is that they both provide diversification. Whether you invest in an ETF or an index fund, you can have broad diversification by owning many different stocks inside of your fund. Some index funds and ETFs may invest in 30 stocks and some may invest in 1,000 stocks. So it really just depends on the fund that you end up investing in. So essentially what you're not going to get is a fund that has like 3 stocks in it or 2 stocks in it. You're always going to have some diversification when you invest in these different ETFs or index funds. The next important thing is that both ETFs and index funds can have very low expense ratios, so they're very cheap. Index funds generally track a market and ETFs can also track a market, and in that sense, both ETFs and index funds will have potentially very low expense ratios. Of course, you need to look at the fund and the fund company, but in general, you're gonna have very low fees. The third and final similarity is that ETFs and index funds both can allow you to invest passively. So when I say passively, what I mean is that you're not having an individual picking stocks or a company or a fund manager or something who is creating like some type of rules-based approach to finding different stocks and then investing in specific stocks. So you're not getting that. You're really getting just an index that's pre-made and then you are tracking that index that's already made. So if you're still a little confused, let's just compare an ETF and an index fund, and I think you're gonna understand these 3 similarities pretty easily. So the example we'll use is a Charles Schwab Total Market Index Fund and a Total Market ETF. So essentially, Charles Schwab has 2 different products that can allow you to have access to the total stock market. So invest in thousands of different stocks and should track the general stock market. So if you go with SWTSX, that's Charles Schwab's index fund. If you go with SCHB, that's Charles Schwab's ETF. Now let's compare these to each other. So in the index fund, it's 0.03%, and in the ETF, it's 0.03%. It's the same exact expense ratio for both of these products. They both yield 1.4%, so they have the same yield. And the 1-year return on both of these funds is 39.3%. So they're all the same. Like, all of the things I just said are the same for both the index fund and the ETF. And so these are like the exact same things, right? So how would you decide if you should invest in ETFs or index funds? So basically what I'm gonna go over are the differences that I think distinguish ETFs over index funds if you had to choose which one to go with. And my first argument for ETFs is the fact that you can invest in non-passive ETFs. And there's a lot of people who only like passive investing who are gonna think that this is a stupid reason. But I mean, just hear me out on this. Like, in my opinion, the way I invest, I want to always have options to have investments in certain things that I don't understand. And sometimes there are fund managers or companies and maybe people who use rules-based investing to find different stocks that I think would be good to add to my portfolio, and I'm happy to do that. Now let's say I want a portion of my portfolio in momentum stocks, but I don't feel like doing research and finding 50 different companies that are experiencing momentum. And maybe there's an index that tracks momentum stocks, but maybe I find managers that do a much better job. And so I'm okay with putting a portion of my money into a momentum ETF where I think the managers or the company has some type of advantage that I definitely don't have, and that has beaten the market for a while. And so this is different. So if I want momentum, exposure to momentum, then I get to have an ETF that is not a passively managed ETF. This same goes, for example, for ARK ETF, the ETF that Cathie Wood manages. ARK invests in innovative companies, which again, I don't know how to pick. I have no idea how to find a good innovative company. I'm not privy to that type of thing. So I'm not gonna do a bunch of research on these types of companies, but I trust that she knows what she's doing because she's proven her track record at this point, and I think we can all agree on that. So if I want to add Cathie Wood's ETF into a portion of my portfolio, then at least I can do that by having an ETF. I can't do it with an index fund. I can't get Cathie Wood's ETF with an index fund. The second reason why I think ETFs are better than index funds is really something called liquidity. So essentially ETFs are more liquid than index funds. Now index funds are not illiquid, they have a lot of liquidity, but ETFs are even more liquid than index funds. For a lot of people, this really doesn't matter because an ETF, yes, you can buy and sell it during the day while the stock market's open, and you can get prices at that point in time or very near the point in time when you would buy or sell the ETF. But with an index fund, you don't get the price at that point in time when you go to buy the index fund. It's actually at the end of the day. And so what happens is maybe you buy in the morning and by the end of the day, this index fund has gone up. And so you're paying a higher price at the end of the day for your index fund. Now, for people who are short-term traders, who are buying and selling really quickly in and out of ETFs, of course, they need liquidity. So someone who's trading definitely wants an ETF over an index fund. But for a lot of people, of course, it doesn't really matter because you don't really buy and sell very quickly. And it's kind of like peanuts in the grand scheme of things. But, they are more liquid. So if you really need to get to your money quickly or sell something quickly, you can do so with an ETF quicker than with an index fund. So those are my two main reasons. And some other things you should probably know about ETFs is just like stocks, they have bid-ask spreads. And then unlike stocks, they have premiums and discounts that they can sell at. Now, of course, ETFs won't always be better than index funds for everyone, and there are some situations where index funds will be better. Say you want to dollar cost average your money into an index fund, well, you can do that at pretty much any brokerage. But you can't necessarily dollar cost average into an ETF at any brokerage. So if that's one of the things you want to do, then you're going to have to go with someone like an M1 Finance that does allow you to dollar cost average into an ETF. Unfortunately, companies like Schwab, Vanguard, and Fidelity don't have that option for you. Something else to keep in mind is that not all brokers have fractional shares for ETFs. Now, for example, Fidelity, they do have it, but Vanguard and Schwab do not have it. But again, like M1 Finance does have fractional shares, so you could have fractional shares and dollar cost averaging into ETFs with M1 Finance. By the way, I have an affiliate link for M1 Finance in the description below. So that's all we have for today's video. I hope this kind of helps you understand the differences between both ETFs and index funds, and maybe it even helped you figure out which one's going to be best for you. And of course, please let me know in the comments below if you think ETFs are better than index funds, or if I'm wrong and you think index funds are superior. Also, please hit the like button. I would love if you did that. And I have another video coming up on the end screen, so why don't you check that out? It's coming up right now.